Hey everybody, Signet here with the Bullish Bears. So I want to introduce you to the second video in the NASDAQ Micro series. It has taken me a little bit of time to get the second video up. I do apologize for that. I've been getting a lot of feedback while people were waiting for this video, saying that they were trying to trade the futures and were having a very difficult time with it, losing money. And I can't understand how that would be possible if you were day trading on paper first to make sure that your strategy was actually something that was going to be profitable and that would make you money. Whenever you attempt to try to do a new strategy, don't use real money. Because once you lose that money, it's gone. You're going to have to find some other way to get some money to retrade again. Practice your craft. I started trading futures in May of 2019, and I only trade one strategy. Even now, here we are in November, I'm still paper trading. Now, yes, I do trade live, but I continue to paper trade my strategy every day. The market conditions change every day. We never know what kind of market conditions we're going to get. So practicing our craft allows us to get more familiar. We get that muscle memory. We also get an opportunity to trade in a different market environment. Take advantage of that different market environment every day. So in this video, I'm supposed to put together some rules for the trade strategy. It's not going to be very complex. It's a very simple trading strategy. We look at where we are at, where we should not be, and where we are going. So the NASDAQ, like I talked about in the last video, it moves in these quarter movements. It gets temporarily exhausted. It pauses at these levels, and then it begins making another move. You want to get familiar with the way that the NASDAQ moves in these ranges. So before we get into the actual trigger, let's put a couple rules in place for your trading. If you're going to trade on the micro, you need to realize that your daily goal needs to be very small. Having a goal of about $100 a week on average should put you around $20 a day on average. That's not an extreme amount of trading, but that is a good amount of trading depending on how many contracts you're going to use. Making $20 a day means that you need to trade 10 points inside the NASDAQ. You got to get away from this dollar amount. When you hear $20 a day, you're probably thinking that is junk. It's not enough money. You didn't get into futures to make $20 a day. Why would I waste my time? Right? You got to get away from that. The micro moves exactly like the mini. And if you can take 10 points a day in the mini, you're not making $20 a day. You're making $200 a day. That's $1,000 a week. I don't know what kind of life you have, but $1,000 a week in my house would really change the way that I live. But I can't just expect to walk into the trading environment and start pulling $1,000 a week out of the marketplace. We got emotion. We've got Twitter bombs and the Fed announcements and economic events and earnings and all of these different things going against us. We got to hone our skills and practice our craft. If you can't make $20 a day trading a micro, then you're never going to make $200 a day trading a mini. Okay? So earn the right to trade a bigger product. Become a master at your craft. There's no excuse to not paper trade. If you're trading live, you can trade paper. I don't want to hear that you don't have the time or any other excuse that you could come up with. If you're trading live, then you can trade on paper. If you're losing money and not making money at the end of the week, stop trading. You are not ready. You haven't earned the right. If you're trading with more than one contract, stop doing it. You haven't earned the right. If you can't make money with one contract, you're not going to make money with 2 or 3 or 4 contracts. If you're trading more than 4 contracts of the micro at any one time, stop. It's not worth the risk or the commissions. You should just go ahead and trade a mini. I could put every little piece of information in this video to help you trade. But if you don't put in the time and the effort and the work that it takes to be successful, there is no way you're going to be successful. There is no magic bullet that's going to help you determine which way direction is going to go. This video isn't even supposed to help you pick direction. So if you were watching this hoping that I had some secret magic little formula that would let you know when to pull the trigger for which direction to buy or to sell, you might as well just stop watching, because there isn't one. Wall Street can't pick direction, and they have hundreds of millions of billions of dollars, and they can't pick direction. Okay? I certainly can't pick it any better than they can. What we can do is identify support and resistance, and we can pull the trigger to get into a trade, anticipating that price is going to use that support and make a move. It's going to react to that resistance and make a move, and we're going to put a trade on. If we pull the trigger and it doesn't use the support where we thought it would, and it falls through, then we exit the trade. We don't hang on to the trade and hope that it's going to come back around again. That's not the way traders do business. Traders have a plan. They build a plan. They have a plan. They execute that plan. Be prepared to lose. There is no trade strategy out there that's a 100% win rate. If your strategy is 70% successful, that's a good strategy. That means you're winning 7 out of 10 times. It also means that those 3 winners should not overtake those winners. And I think I said that wrong. Those 3 losses should not overtake those winners. So when you are looking at price, you should know where you're getting in. You should have an order ready. You already got an idea in mind of where price is supposed to go. You pull the trigger, you get in. If price does not begin to move that way, ask the question: at what point will price move against me and I decide that I'm wrong? I know how it goes when you get in a trade and price doesn't immediately start moving in the direction you wanted it to go. I get that. It happens all the time. But at what point do we decide, okay, I thought it was going down, it's still going up? When do I decide that I was wrong and kill the trade? Or I thought it was going up, it's still going down. When am I wrong and when do I kill the trade? You got to have some of these rules in place. Now, I don't like to use a stop. We need a disaster stop to protect against a tweet or an economic event, but we don't want to try to limit our losses with a stop, right? We're not trying to protect profits in our trade or to limit our risk. We're trying to protect our account against a disaster. So we don't hug price. The stop is not supposed to be used. It's there in case of an emergency. In case a tweet comes out and moves the market 30 points or 50 points. Yes, it's going to suck if you have a 30-point stop and the market explodes and hits your 30-point stop. It's why it's called a disaster. But it's better to hit your stop at 30 points or 60 points than it is for the market to move 160 points. So have a daily goal, a realistic daily goal. With the micros, I've been using a daily goal of $20. I've been using a $100 weekly goal. And it is an average. If I'm a little up extra, I don't care. If I'm a little short, I don't care. If I'm $5 short on my goal, I'm not going to jump back into the market and try to get that $5 more. Every single trade you take invites more risk. The way that you eliminate risk is to eliminate the trade. If you've got the itchy finger, if you're jonesing to get a fix and you just really, really need to trade something, go paper trade. Have a stop trade rule. I take 3 trades that are losses and I'm done. If I lose 3 times in one day, I'm done. There's times lately where I've been only using 2. It's up to you to decide what you're more comfortable with. Identify where price should not go and use that for your exit condition. You need to know what this is before you get into the trade. So you should already be looking at price. You should already have identified where you're going to be getting in. And you should already have asked the question, if I'm wrong, where am I getting out? Now with these micros, when it comes to being profitable, I'm never quite for sure where I'm getting out. I want my $20 on the day. If I can get that in one trade, I'll take it. But more often than not, I'm trading with one contract. So once I'm out, I'm out. And then I got to go look for another trade. Whereas if I just stay in, then I can just stay in the trade, right? I can't fade out when I've only got one contract. But when you go to get into the trade, you should automatically know what price is not supposed to do. And we can use the hard right edge for an example. So we just take the chart, stretch it out here a couple of days, and then we'll pull it across and I'll demonstrate the hard right edge. There really is no there's no plan or program or strategy out there that's going to identify, a 95, 98% win rate, giving you direction and all that great stuff. So right now, we have broke the 50 and we're moving down, right? We're setting these lower lows and we're getting higher lows. So we're looking for a trade entry. I'd recommend setting an alert at the quarters so that when price gets there, you're alerted, right? Put the alert $5 above the quarter and $5 below the quarter. That way you get a few minutes before price gets there and you can make a game plan. So we've made it to the quarter, but we don't have any information yet. We've tagged it, we've bounced off of it, and we've came back down to it and tested it. So we could decide here that this has been a downward market. We're interested in going short. We could take the trade and ask the question, if I'm wrong, where should price not go? This price shelf right here at 29 is where price should not go. If it breaks above that $29 price shelf, I'm really under the impression that this is no longer headed down, right? Now, out of all of this mess, it hasn't hit that price shelf, but it hasn't really gone in our direction yet either. So we could be thinking, look, let's just solve this problem, right? We haven't gotten anywhere yet. Should we even still be in this trade? This was around midnight when we got in. Here it is an hour and a half later. We had some opportunities to take a few points, but nothing really great. Should we even still be in the trade? Well, price hasn't resolved itself, but this downward move in the market is done, right? We're not falling like we were in this great trend here. So what are we doing? Well, we're still not wrong. We're just no longer in a trending market. So should we even still be in this trade? Probably not. With that in mind, maybe we would want to look for an exit somewhere around in here. Get out with some profit and just call it good. That candle right there would have gotten us out of the trade with a loss. It's a 4-point loss. It's $8 of loss right there. Now, we had already started discussing that perhaps maybe we shouldn't have been in the trade somewhere around in here because price just didn't do what we expected it to do. It didn't continue trending lower. So somewhere in that discussion, we could have gotten out maybe enough to get our commissions, $1 or $2 of profit, not taking a loss is pretty much what I'm saying here. So if we'd have stayed in the trade, it looks like it could have done us some good, right? But we wouldn't have wanted to stay in the trade because our reason for being in it no longer existed. We didn't have a reason to stay in through all of this mess. There'd be no reason to hang on to that. You certainly would not have wanted to double down or to average down and try to go short from up here. There really wasn't any reason to. We're not using the quarters. Now, you don't have to use the quarters. You could just decide to trade these micros based on pure price action. But if you wanted to do that, all you would have to do is listen to Rose in her live streams every day where she teaches price action. Now we are on Kansas time, and I am an hour behind the market. So at 8:30 my time, we should see the market open. Wanted to give a little bit of context into that so you would realize that we're, when we're going to be coming up on the bell. Now look, we've challenged the 25 from below for the second time since this major move here. This market has not been interested in dumping, right? It adjusted to some kind of market news. Maybe it was the close of one of the markets, or the open of the Asian market, or the EU. Yeah, that could have been the open of the European market right there. All right. Here again, the sellers stepped up right here, taking it back down. So perhaps we could go short again, but yet we're getting closer to the open. So if we're only looking for that move from the 25, we really aren't getting a very good trade opportunity, because we no longer have a trend. And if you've heard any of my live streams, I like to trade a trending market, and this is not a trending market. We are all over the map with absolutely no reason for the price moves. Yes, this was coming off of support, but there was no reason for this massive candle to the upside where we go 8.5 points in the blink of an eye for no reason whatsoever. Same back here. Unless there was a really good reason, economic news or some other type of event, there's no candle analysis letting us know why there would be this massive spike like this. And there we are at the bell, and we're dumping like a rock. Now, by this time in the morning, you should already have heard whatever's going on through Bloomberg and Seeking Alpha and the news alerts. You would already know what kind of day we were looking for. Was there some big name companies that failed in their earnings? Was there some negative news that was affecting SPY? Was there some overseas news? How did the FTSE 100 do, and how did the Asian markets do? You would have had an opportunity to know what to expect at the bell by this point. If you didn't, then you would not have wanted to be trading the open. We usually have a really good idea of what to expect at the open. If it's been a horrible night with really negative news, we can anticipate, at least at the open, a pretty volatile negative open. Right? Doesn't mean it's going to stay down all day, but you get a pretty good idea after a while when you do your morning routine to have an understanding of what the market's going to do at the open. So this trade strategy that I'm trying to present to you that goes from the quarters to the quarters, it's a trending trade strategy. So when we were back here ranging sideways and price wasn't doing what we had anticipated that it was going to do, there was no reason for us to stay in the trade. It didn't trend. Don't jumble your trade strategies together. If you want to scalp, take a scalp. But recognize that it's a scalp, that you're going to, instead of taking one position and hold it for 25 points, maybe you're going to take 3 and you're going to hold it for 5 points. Right? Don't get everything all mixed up. Put your rules together, have them written down, and pull the trigger following the rules. We're going from a quarter to a quarter. We're giving ourselves enough room that if we're wrong, we can get out. We had price running through this range here and it looked like it kept trying to test the upside move. We could have pulled the trigger to go long on a break from this price shelf here, and we could have used our stop, or not our stop, but our exit rules somewhere around this 22 range. Trade small. Covered this earlier. If you can't make money with one contract, you're not going to make money with 3. So don't try to trade with 3 until you're already proving that you're profitable with 1. Don't trade with 1 until you've paper traded and you're profitable. You want to earn the right to paper trade. Okay? You can set that goal up for yourself. Got a little bit in Discord for that. This is my Discord, by the way. This is not the Bullish Bears Discord. They do not have now, and they will not have a Discord. So don't reach out to them asking when they're going to get it. They're not going to get one. The invitation link to my Discord will be in the room drive in the Bullish Bears website. You can come in and get it and come over. It's free. I don't want any money from you for this because I don't spend any money on this. And it only has free material in it. If you can get it free on YouTube or on the web, you'll find it in here. You will not find our next level, advanced level library material in here. That's a paid product. You get that from the Bullish Bears website. So here on the paper account, a couple of things that I had written out, some rules. This isn't mine. I found this on the web, so these aren't my rules that I sat around and thought up, but I wrote them out in here. Earn what you need to fund your live trading account. If you're going to trade with a $10,000 account, then paper trade until you've made $10,000 on paper. If you're going to trade with a $5,000 account, then trade until you've made $5,000, right? This is going to help make the paper trading actually have something that you can lose. You're gonna want to be profitable, and you're going to treat your paper account with a little more respect because you need to get somewhere with it. Set discipline goals. You have to have a rule. You have to have a trading plan. Have a number for how many trades you're allowed to take. Now that one might be a little bit of, it might not fit you too well, because if you're trying to avoid trading live and you really want to trade, I would rather you trade in paper than trade on your live account. Don't reset your paper trading account balance. If you have blown that thing completely out of the water, grow it back. Start with realistic paper trading capital. If your account is going to be a $3,000 account before you start trading minis, set your account to $3,000 and start trading minis. Account for slippage. Now, this one's a little harder, but if your day done is $20 and you've traded 5 contracts and you know that it's $1.25 per contract, then take that out of your winning. And then obviously at that point, you're not day done. Put your trading commissions in there. That $1.25 that I mentioned, that's my round trip fee in my live account. It's $1.22. I always round up to $1.25. That's not just my slippage or anything like that. That's like everything. Because I don't really get slippage in my trading. I use a market order or a limit order. It's called a market limit order. I don't use a stop limit order. I have my order in place, and when price reaches that point, I get my fill. Very rarely, if it's a massive spike that runs right through my position, I'll slip maybe a tick or two at the most. But it rarely happens. But put your commissions in there. Make sure you're paper trading with live market data. You can trade futures 22 hours a day. So there is absolutely no reason to use the go back, the Thinkorswim go back. If it's the weekend, don't paper trade. Don't try to use the go back. Study something, read a book, spend time with your family, step away. The perspective will help you, I promise. You need that downtime. So use real-time market data. Keep trading records. You probably heard Creed say this before. Maybe you've heard me say this before. Journal your trades. Doesn't matter if you're just taking a screenshot and using the marker on the screen to highlight your support and resistance and reason for the trade. Journal your trade. It takes 15 seconds. Get good at it. You need that so that you can go back and look at your trades later and grow from your mistakes and from your good deeds. Get used to using your platform in many different ways. Don't just learn one single way to trade. Use the mobile device. Use the computer. Use different kind of limit stops, or one cancels other orders, or basket orders. Use hotkeys. Get familiar with your brokerage in as many ways as you can. Because as you grow as a trader, you're going to find that you want to use those different ways. You might find different trade tactics or strategies just because you learn those different ways. Don't join any trading competitions. You're not in competition with anybody but yourself. So you have no reason to try to go out and compete against anybody. So, have a daily goal. Have a stop trade rule. Identify when your trade is wrong and when you should be getting out because what you thought didn't happen. If we're trading from 25 to 50 and price doesn't leave the 25 and it just keeps hanging around and hanging around and hanging around, price isn't doing what I expected it to do. I have no reason just sitting in the trade hoping, and that's literally all it would be, hoping price goes in the right direction. Right? Like we were doing earlier back here. When the trade came down and tagged the 50 or the 25 here, we pulled the trigger. We had a good reason. It was trending down. But the trend stopped and it just ranged sideways. We had no reason to stay in the trade at that point because there's no indication that it's going to go up or down from here when it's just ranging sideways. We have nothing. We have no reason to be there anymore. Get out. And when we have a reason, we can get back in again. So I hope this video was helpful. In the next video, I will be taking live trades. And I want to also promote, while I'm finishing up this video, I have opened a brand new futures account. And I've put $300 in it. The account needed $250. But I've never traded with the company before. I don't know what they're going to do about fees and all of that. And if they took that out right at the beginning, then it would screw up everything that I'm working on for my video. So I put $300 in it. But the video series that I'll be recording is me going in and choosing the data for this new account, setting up the charts on this new account, and then taking this day trading chart and this platform live. I'll be using Tradeovate, maybe connected to TradingView, maybe not. I don't know yet, because if I don't need it, I'm not going to get it. But trading with this $250 account and growing it into a trade station. And a trade station is an account that you have that is actually big enough to pull money out of the marketplace every month or every week, which is, I think, all of our goals eventually in life. We want an account where we're pulling money out of the market and bringing it home. That's what this video series will be about. Taking a $250 account, using a $20 a day goal to grow that $250 account big enough to take minis, and then growing the account big enough with minis to where we're big enough to take withdrawals out of the account. That series will be started very soon, and it's just going to be a video series. Whenever I do anything at all with that account, I'll be recording it. And we'll cut and paste so you don't have to sit around staring at price all day with me. We'll walk through the trades and learn how to use that brokerage platform together and figure out the trading strategy and whatever. In the next video for this series, trading the micro NASDAQ, I'll just be trading it live. And you can see what it is that I do, and we'll go from there. Hopefully this video really helped you. It's mainly the perspective more than anything else. The emails that I've been getting from people who have told me that they're really struggling to trade this is very frustrating to me. It's frustrating because it seemed like everybody is looking for some magical thing that says price is going to go up here. And we all know that that's not true. There's no such indicator or strategy or anything out there that's going to help you with that. The best we can do is say, this is what I think price is going to do. And when it doesn't do that, we either don't get in the trade or we get out of the trade that we're in. That really is what it all comes down to. This is what I think price is going to do. This is what it should do with this support or with this resistance or with this level. And if that doesn't happen, get out. Or if you're not in it yet, don't get in. Don't confuse your trade strategies and try to scalp and then stay in it, because that's a different trade. You're either trying to go from quarter to quarter, or you're trying to take a scalp, or you're not using the micro with these quarters at all, and you're just trading however you want to trade. And there's nothing wrong with just trading pure price action. If we was just to go in and turn off the lines completely, and we wanted to trade price action, it's how we trade everything else. SPY, the Qs, the S&P. We just trade price action. For me, I really like to trade flags, and I like to trade breakdowns and breakouts. So if I see price ripping up and forming a flag, I'm looking for it to break the flag so I can jump in to the next pull up. Look at that beautiful flag right there. So whatever trading strategy you want to trade, it's still got to come down to these same things that I have listed over here. Earn the right to do this. Earn the right to trade live. Please don't blow up your account trying to do something that you haven't perfected. I don't try to go out and play basketball because I've never really played basketball. Right? I don't go out and try to rebuild a car because I've never done that. You can't just go out into the marketplace and start trading without practicing your trade strategy. And we do need a strategy. You can't just run on your gut and hope and instinct. So Thanks for watching the video. I really appreciate it, and I look forward to seeing you at the next one.